What's going on, guys? This is Fire Trader from firetrading.org, and I'm doing a video today going over how to trade the open. Trading the open can be pretty tricky sometimes, and it's a hard skill to master. And the reason being is there's a lot of institutional buying, selling, algorithms, everything driving the stock right out of the open, and that's why we tend to get some very fast, rapid movements right out of the open. And being on the right side of that before that happens, or even just being on the right side of it in general, it's very tricky to do. So I want to show you guys a couple things that I like to look for, how I like to trade them, and yeah, let's jump into it. So we'll pull up this PowerPoint here. There we go. Okay, so trading the open. So we only got one slide here. Trading the open. So there's a first move and there's a second move that I like to look for. Okay. And when I personally like to trade the second move, I'm not much of a scalp trader personally. I like to get into a position and I like to hold that position all day long. As long as the trend is in my favor, as long as it's going in my favor, I will get into that position and I will hold it all day long. I'm not too worried about 50-cent moves, 20-cent moves, $1 move. If you guys look at my previous video about scaling in and out, you guys will know that I like to take profits along the way, but I like to ride it out all day long. So this is why I don't really trade the first move. I lean more into looking for the second move, and I'll be going over this here in just a second. So the first move is going to be more of on the scalping side of things. You're basically scalping the first initial quick move that the stock gets right out of the open. Now the second move is going to be when you can look for those counter trend trades based on a bias that you have from the catalyst, or if it's not gapping up because of a catalyst or whatever that is, then use your technicals. If it's bullish technical, bearish technicals, whatever it is. But I like to trade catalyst-driven stocks in the morning. That means stocks that are gapping up in the morning based on some type of news, whether that's going to be earnings, FDA offerings, whatever it is. I like to trade those type of stocks because they can give me a bias. It'll tell me if these stocks are a little bit overvalued, if they're undervalued, and it sort of gives me an idea. So I like to wait for the secondary move, the second move. And the reason being is because everybody gets all their jitters out right out of the open. Everybody that got in really quick. Everybody that got out. So now it's time to let the dust settle. Now we can wait for a bottom to set in. We can wait for a top to set in, and then we can take advantage of it. Okay. So that's basically it for the slideshow. I know that's quick and easy, but let's go over it here. So the stock closed here, and the stock opened here. It's gapping up, right? We'll just say it had earnings. Now, we have the first move, and that's going to be either a pull or a push into a resistance level or a support level, right? So this is going to be the first move. Now, the second move that we're going to be looking for, in which case I like to look for, is what we're going to do after we get this first initial move. So if we're leaning bearish on the stock and the stock is gapping up and we think it's going to come down, we're going to look for that first initial move right there into that resistance level. We're going to top it off, and then we're going to short it for that fade back down as it fades back down, right? So that's what we're looking for. We're counter trend trading. We're trying to catch advantage of the beginning of the trend change. So now the stock is gapping up and we're leaning bearish on it because of the catalyst. Now, what are we looking for if we get a pull? Now we get a pull. Now we're going to be looking for a bear flag to form here before we take it for that next leg down, and we get that gap fill, okay? So this is the first initial move, and this is the secondary move. So the first initial move is going to be a pop or a pull into some support or resistance level, followed by the move afterwards, whether it bounces off that, or it rejects off that, or it comes up here, flags before that next leg. Okay, so let's go over a different scenario here. Let's say the stock closed here, opened here. Now the stock is gapping up and we're leaning bullish on it. They had good earnings. They had good guidance. So we're leaning bullish. We think the stock is going to make a nice upside move that day. So if the stock pulls out of the open into one of our support levels, we're going to be looking for that secondary move, counter trend trade off of that support level for the long and the push higher that day. Now, say the stock jumps or pushes into a resistance level here. So now what are we going to do? We're going to wait for it to top off at that resistance level. We're going to let it pull back, build a nice flag before we catch it long later for that next move higher. Okay? So we went over gapping up and bearish. Now this is gapping up bullish. Now let's just say a stock closed here and opened here, right? We're getting gapped down. So same thing. We're looking for either a push into a resistance level, and we'll say that we're leaning bullish on the stock this time. We're looking for a push into that resistance level, followed by a flag before we take it long for that next leg. If we get a pull into a support level, bam, look for that counter trend trade, bam, long off that. Okay, now we'll flip it. Stock closed here, opened here. We're leaning bearish on the stock because of the catalyst, right? So if we get a pop into the resistance level, counter trend trade, bam, short it for that fade. If we get a pull down here into the support level, we're looking for that flag before we roll it over for that next leg down. Okay, so these are basically the first move and the second move in which that we're looking for. And I'll show you guys a couple real examples from today. Today's February 19th. I'll show you guys some of our morning notes. And when I'm doing my morning notes, you'll notice when you read my notes that I say, if the stock pops into this area, look for the short. Or I'll say, if the stock pops into this area, let it pull back, flag out, and we'll take it long for that next leg. Or if it pulls into this area, wait for it to start looking for the long, etc. So you guys can adapt, or you guys can use those first and second moves into my notes and what I'm trying to say. So we'll look at Roku here for an example. They had earnings beat, inline guidance. So there's my catalyst. Okay. So that means I'm leaning bullish on the stock, not necessarily just because they beat on earnings and they have inline guidance. They didn't provide downside guidance, but after I read the report and everything, I'm leaning bullish on the stock. So I'm looking for this stock to get bought up. Okay. So right here, if this pulls down into 450 and under, start watching for the bottoming and go long for a nice bounce and push higher today. Okay. So now we'll take a look here. Here's Roku right here. We got a pull. There's the first initial move right here. Oh, think or swim. You're going to freeze up on me? No. So we got the first initial move right here. Bam. Okay. There's our 450 and under. First initial move. Now we're looking for that counter trend trade. We're looking for that long off of that after that first initial move because we're leaning bullish on it. So the stock gapped up. Right? The stock gapped up. Actually, it wasn't even really gapping up. But we got this first initial move. Now we're leaning bullish on it. Look for the long. Bam. There's the long. Nice drive up. Okay? Now we'll take a look at one more here. We'll look at... Which one do I have up here? NVAX. We'll look at NVAX. Okay. So there's our catalyst. Right? They're going to provide 1.5 billion doses of the vaccine. So that's good. That's bullish. They're making money off of it. They're doing business. That's good for the stock. That's good for the company. So I like the news and looking for a bit of a push today. So watch for a quick pull at open back down to 279 and under. That's our first initial move. Okay. From there, start watching for the bottoming and go long for a nice bounce and all day push higher. Okay. So we get that first initial move. Bam. 279 and under. Where is it? Right there. 279 and under. There's our first initial move. Bam. Long. Okay. So that's what I like to look for when I'm trading the open. We've got our first move. We've got our second move. First move is going to be, you could scalp it. This is going to be a scalp trade. The first initial move. There's nothing wrong with trading the first move. That's just something that I You know, I've come to learn that I'm not very good at. That's not my trading style. That's not my trading strategy. I know tons of people that trade, you know, the first initial move, and that's fine. There's nothing wrong with that. It's just me personally. I like to wait back, let the dust settle, and then I'll take advantage of the second move. I'll catch that counter trend, which will hopefully turn into a trend, and I can ride that out all day long. Okay? So, hope you guys enjoyed it. And if you guys want me to go over whatever's next, you know, if you guys want me to go over something, let me know in the comments. And thanks for watching.